Stocks swing between gains and losses in range trade as investors turn cautious after the heady run. FMCG as well as energy are the big gainers today, while IT and auto are the big drags. Mid-caps lag.
Sony says it has not yet agreed to a deadline extension and it awaits these proposals on the completion of the remaining closing conditions. The stock slips on concerns over the deal closure.
Devyani International Yum Brands India franchisee picks up a majority stake in Thailand's KFC franchise, marking its entry into the Thai QSR market. The Street gives the deal a thumbs up.
And Apollo Tyres sees 4.5% of its equity change hands, with Warburg Pincus the likely seller, while Keynes Technology and KPI Green launch QIPs, and JTL Industries and South Indian Bank plan fundraisers.
Attacks by Houthi groups divert ships away from the Suez Canal, raising fears of trade disruption and shipping capacity constraints as boats chart longer routes to destinations. A spike in freight rates remains a strong possibility. Hello and welcome. You've tuned into Business Lunch on this Tuesday afternoon. I'm Nisha Podar. With me, as always, is Pavitra Parekh. So, Pavitra, at the moment, Nifty 50 is stable in the green. We have seen quite a bit of volatility in the earlier part of the day. Let's take stock of the markets at the moment. 21,466 levels, and this despite having trended below 21,400 in the trading session. So a huge amount of recovery that we have seen, and at lunch are at the top of the day's chart. Sensex 2 gaining close to about 200 points at the moment. Bank Nifty is in the green with minor gains, and it's the mid-cap universe which is showing underperformance, which is slightly in the red zone. Advanced decline ratio, though, is in favor of the advances. And on my screen at the moment, Hero MotoCorp, Wipro, HCL Tech and Eicher Motors are some of the biggest draggers in terms of percentage. Pavitra.
So this is clearly a market where every dip is just being bought, right? We saw that earlier in the day as well. So that really continues. Even for the mid-cap index, which is still underperforming, you've seen that recover 350 points from the lows. So you are seeing that up move across the board. The advanced decline has also turned positive. And today is one of those days when you're seeing a lot of the larger weights really pull their weight, right? So names like Reliance, ITC doing very well. The entire consumption pack is up today. You have the oil impact playing out as well. We saw a 3% rise overnight. And because of that, you have, all of the ONGC, Oil India kind of names doing very well in trade. IT is taking a breather, but of course, after we've seen a big run up in that after the Fed pivot, so those stocks a little bit under pressure today. And the auto names also taking a bit of a day off. So that is the shape of the market. But let's kickstart the show now by talking about the big global story. The global shipping space seems to be in a bit of a spot of bother, with cargo liners now actively avoiding the Suez Canal due to attacks by Yemen-based Houthis who have fired anti-ship missiles at vessels. So what could this really spell for the global supply chain, and could it lead to a resurgence of inflation? Prashant is here to tell us more about that. Prashant.
Well, thanks very much, guys. Now, the global shipping market is in a bit of a tight spot, right? Let me tell you why. If you look at global container volumes, half of Asia's shipping to North America as a region goes either via the Panama Canal or the Suez Canal. Now, a Panama Canal, thanks to, in part to the El Nino impact, is suffering its worst drought since 1950. And hence, there's not enough water, so throughput through that particular passage is actually quite limited. So it's in any case, because of these and other reasons, for some time been struggling. It's not being able to carry as many and let through as many ships as it used to do in the past. The Suez Canal approach, meanwhile, has now been attacked by Yemen-based Houthis, leading to most large shippers refusing to ply that route. The world's largest liner, MSC, has announced that it will reroute all Europe-bound vessels via the Cape of Good Hope until further notice. And other liners, including Maersk, CMA, CGM, etc., have also done the same. Actually, the top 4 out of the top 5 global shipping liners have done this now. They are not taking or allowing their vessels to ply that route via the Suez route. Now, why is this important? Why is Suez Canal and that sort of passage through so important? Suez actually serves 34% of the global container traffic global container traffic. That's big, almost more than 1/3. The Panama Canal actually serves 9% of the container traffic. But it's not just about containers. The Suez Canal also accounts for 8% of the total tanker flow, which is stuff like oil, etc., and 5% of the global dry bulk traffic, coal, iron ore, etc. Meanwhile, I mean, if you look at the same numbers for the Panama Canal, that accounts for 5% of the total tanker flow and about 2% of the total dry bulk. So obviously, you look at these numbers, the Suez Canal has an outsized sort of contribution when you talk about the total flow, both container and dry and wet cargo as well. You might ask, well, so what's the problem? I mean, there are other routes available. What's the problem with going via the Cape of Good Hope? Well, the simple answer to that is that the voyage, the time taken to sort of go through, between point A and point B via the Suez, the Panama, or via the Cape of Good Hope, it becomes much longer. For example, if you take, sort of a ship going between Shanghai and New York, the time taken is 17% longer and 34% longer via the Suez Canal and the Cape of Good Hope, respectively, as compared to the time taken via the Panama Canal against each of these. The same also applies to trade routes between Asia and Europe. I mean, for example, the voyage between Shanghai and Rotterdam, that is the Netherlands, is 32% longer via the Cape of Good Hope as compared to the Suez Canal. And of course, the Suez is longer than the Panama. Basically, the diversion away from the Suez Canal will extend the voyage duration and hence removing a portion of effective capacity. You need more ships to do the same trips back and forth. This essentially will lead to more stress on global supply chain at a time when many believe that global inventories have been depleted because of the 1 year plus kind of destocking cycle that we've been in. Have shipping rates moved yet? The Shanghai Containerized Freight Index, these are spot rates, it's been rising for 3 weeks in a row and it's about 10% higher as compared to where it was towards the end of November. This issue remains a potential threat, remember, to earnings of exporters and actually even importers, and also could prove inflationary for commodities such as grains, oil, and so much more. The implications, I mean, this is essentially the nerve center. Shipping essentially is what gets stuff from point A to point B, and the fact that we are seeing one big area, which is the Suez Canal passage area, not functioning at the optimal levels, actually not functioning at all now as far as commercial vessels are concerned, I think is pretty big news and will need to be monitored pretty closely. Back to you.
Thanks so much, Prashant, for giving us all those details. So yet another disruption in the supply chain because of geopolitical risks, and that's coming again to impact global trade. In fact, staying with this big development, the Red Sea shipping disruption story, well, let's listen into Neil Mehta, who is the head of America's Natural Resources Equity Research at Goldman Sachs, as he gives his view on the current situation at the Red Sea and how crude prices have been impacted as geopolitical risks persist. Listen in.
As a rule of thumb, 12% of seaborne oil flows go through Red Sea checkpoints, about 8% of the global gas market in the first half of 2023. The big picture, we believe all roads lead us to $80 Brent in 2024 and 2025 on average. At $80 Brent, you got a price that's Pareto optimal, where Saudi can get close to balancing its budget. U.S. producers can earn a good return of capital. Anytime we're forecasting oil, we have to make sure that we're not forecasting world peace. In other words, you have to assume some geopolitical risk premium that exists and is embedded in the curve. When we look at December 2025 contracts, which have been hanging around $75 Brent, it seems too low. And as we work our way through 2024 and 25, we start to work down OPEC spare capacity. And that's when you have to, once again, reprice geopolitics into the curve. So whether it's Iran, whether it's Russia or elsewhere, we've got to make sure that we take into account that geopolitical risk premium, which again brings us back to an $80 view of mid-cycle.
Okay, important view there. In fact, we also spoke to the management of GE Shipping this morning, and they also expect higher freight rates because, like Prashant was mentioning, 4 of the largest global shipping lines have decided to avoid the Suez Canal. Listen in.
Going to have a couple of effects. One is, of course, to make it take more time to reach, let's say, a Chinese export or of finished goods or Middle Eastern exports of oil, which we haven't come to yet. But for the containers, it'll take more time to reach. Obviously, it makes the market tighter, which makes it, again, rates will probably go up. The market is already really tight. And a 4% further change in demand-supply balance could make it much tighter and therefore increase rates quite a bit.
All right, big development there, and those are different points of views and impacts coming in. While you digest that, we'll take a short break on the show. But up next, heavy rain continues to cause havoc in southern parts of Tamil Nadu. More details when we return.
Tamil Nadu, we've seen record rainfall. Heavy flooding has also, been continuing over the last 2 days. We now have IAF choppers and NDRF personnel which have been engaged in rescue and relief missions across the state. And Tamil Nadu government has also deployed its ministers to the southern districts to really help with all of these efforts. We have Jude joining us now with some updates on the flood situation. Jude, what are the areas which have actually been worst affected as well?
Well, before we get into those details, let's just give you an update as to how dire the situation is on the ground, really. So far, we're seeing the death toll across southern Tamil Nadu, that's 4 districts, remember, rise to 3 in the floods that have been going on for the last few days now. So 3 people have, unfortunately, succumbed to flooding across the districts of Tuticorin, Tenkasi, Tirunelveli and Kanyakumari. Even as we're seeing the deluge take over these districts, we are seeing both IAF and NDRF personnel join hands to conduct joint relief and rescue missions across these 4 districts. The IAF in particular has deployed choppers in Tuticorin and Tirunelveli in particular, which have suffered the brunt of the flooding over the last few days. Remember, this comes even as 800 rail passengers have been stranded in this railway station called Sri Vaikuntham, somewhere in southern Tamil Nadu near Tuticorin. A rescue mission for these 800 passengers, we're told, is also underway, even as 200 boats, we're told, have been deployed across various districts to conduct rescue and relief missions, across several neighborhoods that have remained cut off even as flood waters continue to hold their own. A good day and a half after flooding was first reported in these areas. Tamil Nadu Chief Minister M.K. Stalin has held a review meeting from New Delhi, where he is in presently with ministers across the length and breadth of the state. Most of them, remember, have been deployed in these southern districts to take stock of the situation and help with rescue and relief missions. Now, interestingly enough, we're also hearing reports that DCW has temporarily suspended operations at its plant in Sahupuram near Tuticorin. But the good news is that the Kudankulam nuclear plant, a particularly sensitive establishment in these areas, we hear that there is no reported damage or risk to the establishment. A little earlier in the day, I caught up with Industries Minister T.R.B. Raja to get the government's take on just how dire the situation was and what they were doing to help on the ground. Let's listen into a slice of that conversation I had with them.
Most parts of the Thoothukudi and some parts of the Tirunelveli are badly hit. Tenkasi is coming back to normal already. Kanyakumari is a bit extra hit, a bit more hit than Tenkasi. But I do think certain parts of Tenkasi are also badly hit. But luckily for us, the Chief Minister has already, just before, even while it was raining, we moved all the ministers and all the officers to South TN, and all of them are there on the ground. The Honorable MP is also on the ground. There are industries in lots of, around Thoothukudi especially. Some of them have been affected by the flood, but nothing major, I'm told, yet. My team is already there. We are taking care of things here, and I also intend to go there very soon. But the SIPCOT MD is already there in Thoothukudi right now, and he's also gauging the situation. We have got a few calls, but nothing major, so nothing to worry. I think nothing too much. I think not much of an impact on major industries, at least.
All right, on that note, we'll slip into a short breather on Business Lunch, but welcome back. You're still watching Business Lunch. Take a look at the market. Lost some ground in the last few minutes of trade. A large part of it led by the bank Nifty and some of the heavyweights from banks, especially HDFC Bank. Take a look at that. Seen profit booking from the top of its chart, and at the moment, Bank Nifty is on the flat line. SBI has also lost ground, and other two PSUs, ONGC as well as NTPC as well. But what's really holding up and supporting the market? Reliance Industries, big boy, and the consumption stocks like Nestle, Tata Consumers, as well as HUL, they are the biggest gainers in trade. All right, getting you the latest updates on the political front today. Another 50 MPs have been suspended from the Lok Sabha as opposition continues to protest and demand Home Minister's statement on the Parliament security breach. In fact, taking the total now to 142, which is the highest ever in Parliament's history. Let's take it across to our colleague Parikshit Luthra, who has all the details on this development. Tell us, Parikshit.
Well, over 90 opposition MPs have been suspended in the Lok Sabha, over 45 in the Rajya Sabha. And these are some big names like Manish Tiwari, Shashi Tharoor, Supriya Sule, Farooq Abdullah. And all of this because there were disruptions in the House, protests over the security breach that we had seen in Parliament House that had really shocked the nation, made national headlines. The opposition has been seeking the resignation of Home Minister Amit Shah. They want a statement, an explanation from Prime Minister Narendra Modi, and that has really caused this ruckus over the last few days. So the chair of the Rajya Sabha, the chairman of the Lok Sabha, the speaker of the Lok Sabha, they have been suspending these MPs, opposition MPs, for protests and also for storming to the well of the House, holding placards, also in a way sloganeering against the Prime Minister, Home Minister Amit Shah, and against the Narendra Modi government in general. So we're looking at an unprecedented number of MPs being suspended from the winter session of Parliament. Let's see what happens. There is an India Alliance meeting also taking place to chalk out the strategy ahead. It's bound to be a very stormy winter session that we're looking at.
Okay, Pariksha, thanks a lot for getting us all of those details and that important update. But with that, we're completely out of time on this edition of Business Lunch. We're going to wind down now. We have Midcap Radar when we come back.